What's happening to the Omaha real estate market as we head back to school? In today's video, we're going to look at the Omaha real estate market for the month of August, and we're going to get started right now. Let's start by looking at the current inventory. Currently, we have 1,524 homes on the active market. Now, this is up 8.2% compared to July of 2022. Now, looking at this chart, you compare our current inventory to the inventory back in 2021. More inventory means more choices for buyers. Let's look at a chart of inventory over the past 5 years, and you can see that our inventory is up compared to the years of the pandemic. But if you look at the years pre-pandemic, we're still not up to those pre-pandemic levels. What about home prices? Before we talk about home prices, I want to mention two items. Number one, all real estate markets are local. I'd like to show you a chart from an article in Fortune showing the 10 best and 10 worst markets year over year. In this chart, you're going to see that Omaha is the third best performing market behind McAllen, Texas, and Knoxville, Tennessee. Real estate markets are a living, breathing organism. Markets go up and markets go down. What may be a hot market one year may cool the next. Here's an important note. If you're selling your home in any market, homes sell for market value. A home is only worth what a buyer is willing to pay for it. When a home sells for over $20,000 over list, it still sells for market value. Only the market said it was worth $20,000 more than list. On the opposite side, if you're selling your home and you overprice your home. For example, if you have your home listed for $300,000 and you have no showings and no offers, the market is telling you that you are the highest bidder on your property. In the market we've experienced for the past 3 years, it was impossible to underprice a home. If you priced your home at $300,000 and it was worth $350,000, you would simply receive competing bids and multiple offers which would bid up to market value. And there's only one reason why a home doesn't sell, and that's because of the price. No amount of marketing can sell an overpriced home. And on the buyer's side, if you're a buyer and you think home prices have gone up so much that they have to come down, you might be in for a rude awakening. Homes sell for market value. If prices go up 40%, that doesn't mean prices have to come down. You have to study the market. Be careful who you listen to because you want to get information from multiple sources. Listen to different points of view and make an informed decision. Remember, bad news sells. Market stats can be pretty boring, and it's much more fun to listen to sensational headlines about a pricing or a market crash. Same thing goes for headlines. Many times you'll have people sensationalize a headline in an article only to actually read the article and just find out its basic information. And here's the other thing too, people will read the headlines and they won't actually read the article. Let's look at closed sales for the month of July. Last month, we sold 22.2% fewer homes than 2022. So you can see that last year we sold 1,218 homes. Now in July of 2023, we were below 1,000. We were only sold 948 homes during the month of July. Now you can also see seasonality as the year goes by. Now this is a chart of closed sales. And as you can see, during the summer months, we peak with the most number of homes sold. And then as the year goes on, as we go into fall, the number of sales decrease. And then what happens is at the middle of winter, you see where sales bottom out and then they ramp back up in the spring. We have fewer buyers because many buyers are priced out of the market. We have fewer sellers, especially at the lower price points. And why is this the case? Buyers don't want to give up an interest rate of 3% to turn around and buy a home at a 7% interest rate. Right now, we have low supply and depressed demand. So the market is in balance. But if all of a sudden we had an influx of inventory with depressed demand, then you would see prices decline. Again, it's going to depend market to market. But right now, we have a whole bunch of buyers out there that would want to buy, but the interest rates have priced them out of the market. Look at the interest rates over the past 3 years. In August of 2020, you could get a 30-year fixed rate mortgage for below 3%. Now the interest rate is over 7%. This is going to take years to unwind. Should you buy or should you rent? Now, rents keep pace with the market. For example, if I bought an investment property 15 years ago and it's paid off, do I necessarily lower the rent? No, because rents keep pace with the market. If you buy a home, you lock in your principal and interest payment for the next 30 years. That's why so many existing homeowners who have that low interest rate don't want to sell. Not everyone should buy a home. You need a stable job, you need money set aside for a rainy day, and you want to be comfortable with the payment, and you want to have at least a 5-year time horizon. Maybe you're new to the area, and let's say you're relocating to Omaha, Nebraska. Maybe you should rent to learn the area, see if you can tolerate our weather, and then buy a home. If you buy a home and you decide to sell in a short time frame, that can be very painful. Not everyone who buys a home makes money. Just because sales were down doesn't mean prices were down. Now, last month, the median closed sales price in Douglas and Sarpy County was $321,250, and that's up 7.1% compared to July of 2022. If we look at prices over a 5-year period, you're going to see prices fluctuate month to month. You'll see seasonality. Prices tend to peak in the summer and then taper off and then in the wintertime and then fire back up in the spring. That's why we want to compare year over year versus month to month. Let's look at months of supply. Now, currently we have 1.8 months of inventory. That means if no other homes come on the market, it would take 1.8 months to exhaust the current inventory of homes. If you look at the market for 450 and above, you're going to see that we have 3.9 months of inventory. It simply takes longer for a higher price home to sell. Now, on the other hand, if you look at the $200,000 price point and below, we have just 1 month's supply of homes on the market. As a reminder, 0 to 3 months of supply is a seller's market. 4 to 6 months of supply is a balanced market, and over 6 months of supply is a buyer's market. As a seller, you want to adjust your expectations, especially in the higher price points. You're always in competition. Let's say you have a well-maintained and updated existing home. And let's say it's 3-bedroom, 2-bath, 2-car garage, split entry in a very nice area. You're still in competition with new construction. Now, one of the benefits of Omaha is that you can get across town in 30 minutes. That means that new construction property that may be only 10 minutes away in a different school district, some buyers might find driving an additional 10 minutes for a brand new home worth it. Everything is relative. If you are in a market where homes sell within hours, you receive 10 offers, and the buyer waives the home inspection, and you shift to a market where homes take a little bit longer to sell, you have to make concessions, and the buyer's going to do inspection. This is a shift to a normal market. Now, as a buyer, you have to pay a higher interest rate, but now you have more choices, and you may not have to compete with 10 other offers and then waive the inspection. And you may get a concession or two out of the seller. Let's look at average days on market. In July, the average days on market was 17 days, and that's up 88.9% compared to 2022. If a home is priced to market, it will sell in average market time. Now, this is where pricing is very important. If you look at the median days on market, the median days on market is only 3 days on the market. That means half of the homes sold in 3 days or less. But when you look at the average, it's much longer. Okay, so that's why pricing is so important. You want to make sure your home is priced correctly. If it's priced correctly, it's going to sell quickly. What about the average days on market for homes priced $450 and above? Currently, the average days on market for homes priced $450 and above is 29 days on the market, and that's up 61% compared to 2022. It simply takes longer for a higher price home to sell. there's less competition and there's simply a smaller pool of buyers because fewer people can afford the higher payment due to the higher interest rate. Usually in a real estate transaction, when a home sells for market value, two people are unhappy. The buyer thinks they paid too much and the seller thinks they sold it for too little. Now, if you want to learn more about Omaha, be sure to watch this next video. And if you found today's content helpful, be sure to subscribe to the channel and you make it a great day.